Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I am charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my prediction, if you want to support my research, you can donate me using this Google Pay and for Phone Pay and Paytm. Let's go to the review for the Friday prediction, and then we'll go for a Monday prediction. Nifty ended up in the flat negative 15,163.30, 10 points in the negative, 0.07% in the negative. Opened around 15,186.20, which is above the previous closing, and the lows went 15,008. 81.00 and high went around 15,243.50. Let's go to the review of Friday, how the prediction was given. As per the data Friday, it is shown clearly on the volatile market because of the absolute frequency is indicating the volatile because of difference of 1 points, but other parameters all indicating negative. So that is the reason the market has opened in the positive, but still it has fallen down towards the negative side. So if we check out with the high and low, it will match in our data. We have still open in the negative side around that 14,971. The target still not yet fulfilled as per just see the market has opened 15,186.20, which is on the positive side but still below the volatile level 1. So anything above the volatile level 1 only the extreme bullish will take place. So first itself it is indicating the pre-opening opened below that level. The high is matched around 15,243, which is in the range of R3, I think. Yes, the stop loss of 10 points in that average level 15,246.27. It is not broken that level, so that is the reason it has fallen down from that positive towards to the negative direction. 15,081 is the low, and it is exactly matched in the volatile level to 15,079, difference of 3 points. So we have still pending that 14,971 target is still pending. So we can hold put options if the market is opens in the gap up on Monday as well. So any day the market may fall down just like anything. Let's go to the prediction for Monday. The Monday data is showing once again a volatile market, but with a positive intact. So the difference of 1 point, which shows the market having chances to go volatile. But in the downside 1:2 it is there, but the ratio is on the positive. Average absolute frequency is on the negative side, so which is clearly showing volatile, but the weightage is almost evenly poised because of the difference is not much, which indicates the exact same kind of thing. Evenly poised comes means it is all three results possible: bullish, bearish, or flat. So all evenly poised with 33.33% chances, so which means it is not going to be easy to trade. So small traders better avoid trading, otherwise you need to keep both options in hand, minimum of 10 rupees in the options. So it is not going to be easy, but it is worth keeping both options. If any side breaks out, and you can end up huge profits. But small traders, if they don't want to take risk, they can avoid trading on this particular day. And let's see how the market is going to be from the pre-opening. The minimum of positive side average, which shows around 157 points, around 1.04, and the minimum of negative side, which shows close to 1% on 47 points. So both sides evenly showing 150 range. So if the market is opens above volatile level one, which attracts towards the bullish, these levels around bullish open target level, bullish level, positive average, or R5, or so resistance 5. So these levels 121 to 157, these levels up to a market having chances to go, but high is matching with those levels. For example, the high is matching with those level with the 3 points range, then the market is having chances to fall down that particular level towards to the negative side. So we need to watch out the highest matching with these levels or in those average levels with 3 points inside. So the bullish market stop loss is there in the range of 15,151 minus 10 points, so 15,141.1, it is 17, it is 17. So the extreme bullish stop loss is in the range of 41.17. This is the extreme bullish stop loss. Anything opens above pre-opening volatile level above, which is more than 62.17 points, it has to open, and then it is there in the extreme bullish range. But still high is matching means it might have fallen down from that level to any level on the downside. On the other hand, the normal bullish market, anything opens positive 1 points and not breaking the support level 1, which is 15,107.81. It's indicating that one market may having chances to recover once again and may end up in the positive. So this is the normal bullish market stop loss. For the bearish market stop loss, if the market is reaching anywhere high, then if it is falling down means it will go to any extent on the negative side, which is 147 or even below that level. But as per the pre-opening, if the markets opens below this volatile level to anything more than 22.74 in the downside, which attracts extreme bearish stop loss with the range of 15,161.17 is the extreme bearish stop loss. So which means it is kind of a controversy. So normal bearish stop loss itself having higher means it might go any level on the downside. That is what it is indicating. Normal bearish itself, normal bearish normally comes inside, and the extreme bullish will always be on the outside. So it is kind of a weird. So the extreme bearish go to any level if it is goes bearish today. So we already having the target of 14,971 in hand, so it might go to any level. If this will take place today, the market may go down up to 200 points downside if it is on the bearish. So the normal bearish stop loss is in the resistance level 1, which is 15,238.50. On the other hand, if the market is opens in the gap up, for example, anything opens more than 100 or above anything above 80, then we need to play much more cautiously, because we know the data is evenly poised, almost 2.57 versus 2.16, so it might go bullish as well. So what kind of a scenario it will be if the market is opens in the gap up? There are two chances to happen. It might fall down after reaching the high, matching with the data perfectly within the 3-point range, then it might go heavily downside. On the other hand, if the market is opens in the gap up around 80 to 100 points, but the fall is not that much, but the fall is happening, but somehow it is not breaking the volatile level 1, it is turning around means it will go to extremely bullish. This is one kind of a thing. So the stop loss can be maintained at 15,225 minus 10 points. If it is breaking only, it has to go, but still the volatile level 2, once again this particular minus 22, that level also the market having chances to recover. So these are all the range we can try to keep stop loss and buy. Those are all the risky in buy, but still you are going to keep only stop loss at 10. So once it is falling down that level, nearing that level, you can try to take buy, but it is risky. We know that only high risk traders can do that, because it might have break and go towards to the negative average due to the volatile market of the levels showing. So I'll show you why, because the data are showing negative. So these kind of volatile levels, which shows it might have chances to reverse. So that is the reason only for high risk traders can bet, but sometimes it will fail you as well. So you need to know the risk of buying those levels. If it is not breaking those levels, it's definitely going to rise. If it is breaking, then it will fall down. If it is break, then it will fall down. So these are all the risky buy levels. Let's see how the market is going to give us on Monday. Thank you. And one more point I would like to add on is the pre-opening par value. Whether if the market is opens anything above 16 points, the market try to attract the positive direction around 392. But if it is breaking down, if it is breaks down on the negative side, those levels means it might go 200 as expected, because of the negative side 14,971 still we are having pending. So if it is breaking, then it will go to 425 as well. So must have to keep both side options in hand today. Let's see how the market is going to give us on Monday. Thank you.